Mystery chart from before the break. Alibaba still holding on to massive gains on the year despite tit-for-tat tariff measures between China and the U.S., with China's retaliatory tariffs on U.S. agricultural products taking effect this morning. Here to help navigate it all, MSA Capital Managing Partner Ben Harburg. Ben, thank you for being here. So just kind of where do you think we are with regard to this trade dispute between the U.S. and China? Do you think it gets exacerbated from here? Do you think each side has really calibrated their policies to leave room for talks?
It's definitely early innings, and I think you'll continue to see a tit for tat and volleys going both ways. After the first U.S. announcement of 10% tariffs, the Chinese came back with, I would say, a kind of muted response to enable room for negotiation. With the tariffs being raised another 10%, the Chinese, I think, hit back harder this time on agricultural products, things that would affect swing states. So I think we're still in early innings, but my comfort level is high that we're headed towards some kind of a pragmatic solution rather than a never-ending kind of a trade war.
At this juncture, who do you think has more leverage?
Well, the U.S. remains the world's largest market, and China's problem is that it's running trade deficits or surplus, depending on what side you're sitting on, with just about every country in the world. And so everyone is unhappy with the way that Chinese products are flowing into their markets. And so if China doesn't start stimulating domestic demand, everyone's going to be in individual trade wars with China. And so I still think we have the rest of the world on our side. We need to settle our own trade spats with them and then train all of our energy on China. But I think the power's on our side.
With regard to technology, Alibaba, we mentioned, was kind of the mystery chart heading into this segment. DeepSeek really upended this notion that it would take years, if ever, for China to catch up with U.S. AI. What's the feeling on the ground there, and how does that play into the whole trade dispute as well as it pertains to technology, which so far, at least on the China retaliatory side, seems to have been spared?
So, I think that there was a bit of a hubris on the U.S. side that we had such a head start over China on AI that would give us leverage within this type of dynamic. The reality was, dating back to the kind of early entity lists in kind of 2016-17 era, China worked aggressively to decouple itself and unwind its reliance on U.S. technology. Certainly, they're still accessing chips through third-party countries, things like Singapore and others. But the reality is that China's far ahead of where we thought they were, or at least where they were pegged. And so that gives them leverage because it means that now people are rethinking actually their valuations of Chinese stocks. They're rethinking their valuations of Chinese technological capabilities. And a lot of that feeling of Chinese kind of really being a fast follower or a copycat technology player are evaporating.
Last week, the Chinese premier set out a growth goal of 5%. And a lot of skeptics said that, given the trade uncertainties and the deflation and the property crisis that's going on there, that may not be achievable. Do you agree with that? Or do you think there is a bright spot in the technology world that could help China really kind of regain that momentum to hit that growth goal of 5%?
Well, during that same event, Xi Jinping hit heavily on technology. They've really cozied up to technology after being at odds with it over the last few years, bringing technology leaders into Zongnanhai and other, high-level meetings. And what that results in is a sentiment that they really are going to lean heavily on this technology leadership, and companies like Xiaomi and Baba, who have been doing phenomenally well in the market. And I also think this forces a re-rating of how American investors or global investors look at China. I think Chinese companies were fundamentally undervalued in this world. And now, because of the success of the likes of DeepSeek, Ali, and others, they're recognizing that they should reprice those. And I think that's what's yielded a lot of improvement in the Chinese public markets. And from a private, kind of a real estate perspective, I think we've seen a stabilization in China. And the result of that is that if people's public portfolios and real estate is starting to bottom out and stabilize, I think that'll start to lead to more stimulus and more consumption, which will ultimately help them hit that 5% number.
Absolutely. Those seven titans, an equal weighted basket, has gained more than 40% this year, compared with about a 10% drop in an index of Mag 7. So just a remarkable divergence there. Ben, thank you.